Hey guys, Max here, and this is your daily market update for yesterday, the 22nd of February. Now, very briefly, what happened? Well, the markets fell pretty much all on this development regarding Ukraine and Putin kind of invading Ukraine, but not really, just the disputed area. There is, of course, so much nuance at play here with this crisis, so if you want more information on that, I'll link down below the video summarizing that situation and that development that I put out yesterday for anyone interested. As for right now, what happened in the markets? Well, they fell. American equities were, of course, closed the day before. There was no trading as it was President's Day, but the rest of the world was trading, and futures and derivatives and things like that were open as well in the US. So most equities fell the day before yesterday on the immediate fears about a war or conflict in Ukraine. US futures fell along with equities everywhere else, but as yesterday came about, as markets were set to open, things were actually looking very slightly bullish for US equities. Now, I know that sounds a little bit ridiculous, but for the first few hours of trading, stocks were very slightly up, despite the escalation, and it was predicated on this idea that the sanctions from the West in response to the escalation in Ukraine were very weak and unlikely to impact markets at all. Again, we covered this in detail yesterday, so I don't want to waste too much time right now covering the same stuff, but one of the big fears in the markets about a war in Ukraine is how sanctions put in place by the West would impact Western markets, firstly for companies who would maybe see decreased revenues or reduced customer bases as trade with Russia becomes more difficult, but also because of things like oil, gas and grain prices spiking as Russia and Ukraine are major world exporters, and how that might influence inflation around the world and how that might cause the Fed to tighten monetary policy further. Now, because the sanctions we actually heard about yesterday were very weak, pretty unsubstantial, the markets felt like there wasn't too much to fear at first, but that only lasted a few hours before equities took a turn for the worse and we ended up seeing another rout across the indices. By the end of the day, the S&P 500 had fallen 1%, which means that the index is officially now in correction territory as it is now down more than 10% over the course of the last couple months. The Nasdaq fell 1% as well, so it is now down over 16%, a fair bit more than the SPY as it is full of very risky assets that were valued on nothing but hot air. Bonds again saw some inflows, but nothing quite as strong as the day before, and yields actually remained pretty constant across the board. Currencies as well didn't see any major changes. They stayed pretty consistent. Oil prices did rise a little bit once more, with WTI crude now sitting above $92 a barrel and Brent crude sitting above $96 a barrel, so bad news for inflation for sure. Gold saw a very minor rout, falling just below $1,900 an ounce, but really nothing major there either. So why did it all change after a few hours and stocks that started the day strong ended up down at the end? Well, it's probably a few things, both of which obviously relate to the escalation in Ukraine. Now, the first thing, very simply, is that Western governments received a lot of criticism about how weak their sanctions are, and they're already talking about strengthening them, which is slightly worrying to the markets. The UK, for example, targeted 5 small Russian banks that don't even operate out of the UK, and 3 individuals who have already been targeted by American sanctions for the last 4 years. Basically, these sanctions will do nothing, and the government got a lot of flack for being so weak, so they're already talking about what they might add to those sanctions to make them more impactful. Now, Abramovich is a very famous Russian billionaire here in the UK who owns Chelsea Football Club, and he's a pretty good example of the type of people who hand Putin his keys to power, but who have managed to remain out of the firing line for years now as tensions between East and West rise. Well, that might be changing, and these billionaires and oligarchs might actually get hurt for once. Now, the same sort of thing was seen in the US, with Biden's sanctions being widely criticized for doing a whole lot of nothing by both sides of the political spectrum, Democrats and Republicans alike, and so lots of influential Americans, lots of lawmakers as well, are calling for stronger sanctions. This worries the markets. They rallied on the idea that sanctions were weak, but now they're retreating on the idea that they're going to be boosted with new fresh sanctions because they were too weak. This isn't actually a hard conclusion to come to, but it is a little bit irrational of the markets to make such huge moves on what really amounts to rhetoric in the media and not much else. Now, the second reason markets had a slight panic, in my opinion at least, is because these sanctions were so weak that they pretty much guarantee Russia and Putin are going to continue to push the crisis further. Putin just recognized 2 independent states and sort of invaded Ukraine. It's pretty much a borderline invasion, just like Crimea was, and the consequences so far are pretty much non-existent, so markets are now expecting Russia to push this further, to escalate again, and that's a worry for said markets. Much like how the Fed has become a master of doing just enough to convince people that they're fighting inflation while not doing so much as to panic investors, the West and the US is trying to do the same thing here with Ukraine. They're trying to put up enough resistance to convince Russia to stop escalating the conflict, but not put up so much resistance as to actually escalate the crisis themselves or damage the markets. The only difference is here that the West got the balancing act a little bit wrong. They were too light, too weak, and as a result, the crisis is going to continue and actually get worse. Now, funnily enough, the country that actually made the biggest stand against Russia this week is the same country that has been opposing reactions to Russia in the weeks prior. It was Germany who cancelled Nord Stream 2, the major pipeline that has basically been tearing Europe apart for years now. Essentially, the pipeline would solidify Russia's grip on Europe's energy market, and cancelling it will not be easy for countries like Germany, who import huge amounts of gas from the east, but it is necessary. Energy security has been neglected for far too long, and it's time Europe stops relying on an aggressive foreign state for something so essential. Now, what do we expect for the rest of the week? Well, more developments. Rising tensions in Ukraine are of course going to keep coming. Russia did just come out and say that they are still open to solving this crisis diplomatically, but that is obviously a load of bollocks. We have some policy decisions from some countries this week as well, New Zealand and South Korea. We have some data coming out from the US as well, US new home sales, GDP figures and initial jobless claims, consumer income and PCE data as well, so there should be plenty to talk about. Now that is it for the day, guys. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to Masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.